What's going on, guys? It is 6:37 p.m. Central Standard Time where I am at. This is actually the second time I'm recording this. I completely botched some data, and yeah, I didn't think it was a good video, so I'm redoing this one. So, all right. Anyway, here I am. I am now gonna begin, starting with the S&P 500 chart. All right, so I'm gonna go start with the daily here. The daily, unfortunately, we had a daily candle close below this perceived support here. Definitely thought that this was going to hold. Unfortunately, it did not. Very bad news happened today. A bunch of banks are going bust, unfortunately, starting out with Silicon Valley Bank today. You know, they had ties with the Silvergate Bank. I'm not too sure if you're familiar with those banks, but essentially they're crypto friendly, and a lot of them are kind of becoming insolvent. Unfortunately, people are realizing that they're holding toxic assets, and it's been a huge detriment to the market overall. This is kind of what happens in recessions. Banks end up going bust. But real people cannot gain access to their money right now, so it is a tragedy, and this is frankly led by the Fed. All right, anyway. So I'm going to zoom in a little bit here. So after we did lose this line, essentially a support, I have to reclassify this as resistance once again. We do have this downward sloping yellow line here that could ultimately play as resistance if the bulls do not step up. So that's a big issue that we have right now on the 4-hour and daily perspective. Also, I will say though, we do have a larger descending broadening wedge pattern happening right here, so this area is still valid. This could go on for a while, okay? Now, these descending broadening wedge patterns, they are ultimately bullish. They do usually break to the upside. So you can eventually see if price actually comes back here at some point. Whoops, I did not intend to do that. Kind of like where my mind's at. I'm kind of like thinking like this could play out something like this ultimately. That's kind of like what I'm thinking at this time, but that's just my thoughts. That's not reality. I can't Nostradamus this stuff right now. I can only look at what I see in front of me, the data that has popped up. But we're kind of in no man's land right here. I would be completely honest. We are breaking below the Bollinger Bands, and it's looking like this particular cross to the downside, it has confirmed a parabolic move. And that's kind of like what's happening. I do see significant lines converge around this particular area. I wouldn't be surprised if price actually decided to come back here and retest this pivotal level as support, or maybe even break below it and confirm it as resistance again. But yeah, if you go back all the way to say June of 2022, this was acting as kind of like a little platform for a rally, came back down, got back tested as resistance here until it rallied again. So we could see something similar. I wouldn't be opposed to seeing that, frankly. I would welcome it. But if we're able to actually recover this area, if we were to actually use this area as a launch pad to then kind of break above this significant line of resistance, that would make a lot of sense. If we could go sideways here within this particular box area and eventually break to the upside, that would kind of be phenomenal. As it stands right here, a lot of bearish things are happening, and you just got to take it in stride as such. All right, so I'm pretty much done with the S&P 500. I'm bearish until we hit other support zones, which, you know, that bleeds into the crypto market. All right, so I'm just going to stick with the S&P 500 and Bitcoin today. I'm going to keep it rather short, but ultimately, yeah, there's some intraday developments that I'm keeping my eye on that could lead to some kind of recovery, but nothing of significance. Anywho, I'm going to go to the daily time frame. If you go to the daily time frame, it sucks because the Bollinger Bands and the exponential moving averages have flipped red for the first time in a long time, okay? It's the last time we saw something like this was back here. So, at the very least, we are going to see consolidation, and we are going to see confirmation that the daily and well, the daily 21 exponential moving average and the 9 exponential moving average, which they're right here. I know there's a bunch of lines converging, but this particular zone is acting as resistance, and it's unfortunate, but that's just the reality of the situation. We're going to have to see price recover, test it, get rejected off of it, to then try to recover and break through it. So that's kind of like where my mind is at this point. If you go into the more intraday time frames, as you can see, if you go to the 4-hour, it looks like we've got to bounce off the downward sloping support. I've had these lines here pretty much, whoopsie daisy, did not mean to do that. Pretty much confirmation back here was February 25th. So pretty much since February 25th, I've been keeping my eye on this downward sloping support line, and guess what? Hey, it back tests it. And right, right when it back tests it, it starts launch padding a little bit. But, ultimately we do have a downward support. We have significant bears in the market that are purposely doing this to buy back in cheaper, I'm assuming. So we do have quote unquote nefarious actors. We have some bears that are pretty prominent that are keeping the price low for a reason. All right, so if I zoom in on the 1 hour, now this is where these dotted lines have more significance. And actually, let me turn on the support and resistance so you can see it better. We have no true support popping up just yet. Why do I say that? Is because the true support is these yellow lines right here. Support and resistance are the yellow lines. Those are more powerful than the dotted blue lines, the dotted red lines. That's just how this indicator is set up at this time. So we don't have true support just yet. Now we could have some true support here at 1,900 and I'm sorry, 19,442. We could have that kind of turn into support, but so far I can't confirm that. So at this time, I'm going to leave it as such on that. But remember this level, okay? Remember this level. This could be a reactionary area at 19,542. All right, so I'm going to turn that off so I don't confuse you. But in terms of intraday, we've had this basically descending broadening wedge pattern break to the upside. For the past two candles, it has done so. Now, the thing I don't necessarily like about this is that it is, let me move it here this to make it more accurate. There you go. It hasn't necessarily backtested as support yet, so basically the reason I have this particular line at 19,611.5 here is that if we see an hourly candle close break below here, I'd feel a lot I would feel a lot less confident that we're going to sustain this zone, and we're probably going to come back down to the 0.382, which is 19,195. When I zoom out, it'll make more sense and it'll be more clear. So far, I am kind of in the camp that we're going to rally up into this point, get rejected, maybe backtest this as support, and maybe then give it a shot. That's kind of like where I am at this time. I will be honest, I'm in no position at this time. I definitely want to see this particular area get basically broken and then back tested as support to then maybe try a long position. It's a little too risky. The 1 hour, the closer that we get to the weekend and the lower the time frame, say like the hourly, 30, 15 minute, it gets a little bit wonky. You want to do that stuff maybe earlier in the week. But anyway, okay. I would definitely say that this particular gray box right here, basically from 20.3K and 19.6K, that's going to be kind of like the line in the sand. Okay, so are we going to, whoops, did not mean to do that. Are we going to break to the upside, confirm it, go up? Or are we going to break to the downside, confirm it, and go down? That's kind of like where I'm at this time. You can, I would recommend it if you're inexperienced, but you can scalp this entire box. Okay, you could scalp it and do well for yourself. I don't necessarily do that right now. I got a lot on my plate, so I'm not going to be doing stuff like that, but that is what a lot of people do for arbitrage if you're looking for an opportunity. All right, but overall, if I were to zoom out a little bit more into the 4 hour, I do feel pretty confident about the positioning. So overall, I'm keeping my eye on this particular zone here. If you see a 4 hour candle close, above this red line, then we're most likely going to be back testing this area as either support or even breaking through it. Or if we break out of this zone, we're probably going to come down to these levels here, I would assume, or maybe have like some wick action right here and find some daily or hourly 4 hour candle closes right there. So I do have these three pivot zones marked on my my chart at this time, and I also do have these particular areas locked at this time. And I do have this particular box, and I was asked today in regards to how'd you know when to short. And it was essentially this 4 hour here. If you zoom in, we kind of had we had a 4 hour candle close right here, okay, And then we were having wicks right here, and then we had a bullish engulfing candle right here, but then we almost got nullified. So basically this is particular zone similar to what I have with the current gray box. If I were to zoom in, similar to what I have with the current gray box, we have something a little bit here. It was way more narrow, so this was just easier to calculate. But yeah, yeah, I'm going to turn this. This is definitely resistance now, so I'm going to turn that red. But at the time, this was resistance, and this 4-hour candle, it looked promising. We had a significant wick to the upside, and it just completely closed the candle up here. But the following candle is what killed any opportunity for the bulls, unfortunately, because we had this candle close right here. And not only was it just a candle close, it was a bearish engulfing candle, this particular candle right here. That bearish engulfing candle, that's all she wrote. Now there was some support and resistance right here, but if I go to lower term time frames, you'll see exactly why it was kind of like a spot to worry about. I think it was, yeah, there it is. Yeah, it was the yellow X's, right? So common pivot points, common spots to reverse are the 618 and the 382 Fibonacci, the 618 and the 382. Okay. Once we realized that the bears weren't having it, the whale bears, I like to call them, they had a candle close on the 4-hour right here. This was another great entry. When you lose the 618 as support, it's over. And you even had time here. As you can see, this candle right here had a wick to the upside, and it back tested it as resistance. So there was approximately 8 hours of time you could have. I'm sorry, 2 hours. This is the 1 hour time frame. My apologies. You had 2 hours to make your decision on that. Unfortunately, if it was the opposite, if you had a bullish engulfing candle above this big red candle, that would have confirmed a pump to the upside. In this instance, we had a 618 loss of support, back test, and then you see the next candles. It's just red only for a while. Yeah, but same thing with this area here. We lost a key level here. This was acting as support for some time now, and we just couldn't hold it. We couldn't hold it at all, and you had a couple of things. This was kind of like where the battle was raging. We had a bearish engulfing candle right here. We had a back test as resistance in both instances right here. Okay, we had a bullish candle that couldn't break back above former support. Then we had a bearish engulfing candle right here that not only broke below the long-standing support line that is now resistance, but it broke outside of this range that price had been for days, essentially. And that was the beginning of the end for the bull trend, and even broke through the 618, just completely shattered that support line. And we're here in this particular box zone. So this is where the battle is raging right now. Did capture this a little tiny intraday pattern, sorry, but I will say that it's pretty clear on the hourly time frame that we do have a zone here to keep our eyes on. Like I said, I haven't necessarily opened a long at this time. I definitely need to see this downward sloping line back tested as support for me to actually think like, okay, yeah, like we're gonna go to the upside. So that's kind of like where I'm at. I would like to see my momentum oscillators kind of show some stuff a little bit differently. So from the 1 hour perspective, I would love to see a, for example, this to kind of play out right here and then to create a trigger wave. I always talk about these, but I like to see my trigger waves. When you see trigger waves, that's usually confirmation of momentum shift. At this time, we do have money flow pointing to the upside. That's phenomenal, but the momentum oscillators look a little exhausted. I will be honest with you on that. So when I see, say, like a divergence here, I will definitely consider opening up a long. It's just not there yet. It's kind of like a random spot to for big players to be buying into. But this is a nice sign. This is a positive sign that a lot of the damage has already been done, and we're just kind of bouncing and consolidating. So that's kind of like where my mind is at regarding Bitcoin. But I'm going to keep it at that. I have a lot of stuff I need to do tonight. But I just want to say, if you're still here, thank you so much. And yeah, if you haven't already, please like, share, and subscribe. And yeah, let me know if you want me to cover any other things besides Bitcoin. But take care. Peace. Bye-bye.